and welcome. I'm excited to get started with our topic, how to build your credit. I'm Becky Fremall here at ValleyStar Credit Union. And joining me today is Diane Walker, Card Services Manager, and Brittany Rowe, Loan Services Manager here at the Credit Union. Thanks to both of you for joining us and for your willingness to drop some mad knowledge.
Hello there.
Hi.
Hello, hello. All right, let's get right down to it. I'm going to just dive right into my first question. I've done my research and I know that you guys both have quite a few credentials to speak on the topic of building credit, best practices, advice to help people get on track. But if you could just share a little bit of your background and your expertise, if you would, and I will start with Diane.
Yes. Hello, Becky. Thank you for having me. I have been in the credit union world for 30 years. Valley Star will be 22 years this year. And regardless of what role I've been in, credit cards have always been there. So many years.
That is awesome. Brittany, what about you?
Well, I've been with the credit union for almost 12 years. I have been doing loans for 7 of those years. I look at a whole lot of credit reports, probably about 100 during a week. So I see it all. I see all kinds of credit.
I can imagine. So let's get right to it talking about this. Good credit, of course, is the one we all want to get at, if not excellent. We hear about it all the time. And quite honestly, you get asked if you have good credit anytime you apply for, heck, anything, jobs, loans, you name it. So let's talk about good credit. What exactly is considered good and why is it important to have the good credit? Diane?
You're exactly right, Becky. Everyone looks at credit, and to have good credit means you've been responsible for your own actions of how you've handled your livelihood, your affairs. Dependent, responsible, you pay your bills on time. Do you set up a budget and you stick to it? Making minimum payments, maxing out credit cards. All that shows on your credit report and shows a history. You shop for credit cards, you're looking for the lowest rates, reward cards. Even you shop insurance rates or job interviews. All of that, everyone looks at your credit report. And to get those best rates or best insurance rates, credit cards, you have to have good credit. So just because you see something online that's a low credit, credit score or interest rate, doesn't mean you're going to qualify for it. So that history overpaying your debt manages, how you've done that. You go for a job interview, they're going to pull credit. They want to see how responsible you have been with your own affairs and if they think you're dependable enough.
We were kind of joking about this too, Diane, and I laugh. You were saying that you're talking to your daughter that adulting is not necessarily fun, and this fits right into that category.
That is very true. I tell her it's not fun. Enjoy your college years, enjoy having your parents there to help you make that decision. Don't get hooked on, you think you have that college education, you're going to come out and make a lot of money, buy fancy cars and max out credit cards, because it's not fun when it comes to paying it back.
Exactly. So, give us a look behind the scenes, if you would, Brittany, about what lenders are looking for. What are they searching for to determine whether you do, in fact, have good or even better, excellent credit?
Well, so many consumers are just concerned about that score, whether their score's over 700 or 800, or if it's down in the 600s. But we do not look just at a score. The score does determine what your rate will be, but we look at much more, whether or not how much new credit you have. If you're just starting out, you're going to have probably several new accounts. We look at the payment history, how you're paying. If you have any delinquency, we look at your debt ratio, the credit utilization. So there's a lot that we look at to take into place, whether or not someone qualifies for a loan.
All right. So you just threw out a whole lot of bullet points, and I'm kind of thinking, what? So I'm going to ask you to break it down for us if you could. I want to start with credit utilization, most importantly. That's a percentage, I believe. And before you answer, not only what is it, but what percentage should we strive for? And how do we do that? And I'm out of breath. So, girl, drop your man knowledge on us now.
Well, credit utilization, it's determined by your revolving credit. So how much you're using. So if you have $1,000 card, whether you're maxed out on that credit card. They say to keep it between 20 to 30%, no more than 50%, so that it doesn't hurt your score. I've seen where someone has perfect pay history on all their credit cards, and their score will be in the low 600s because they're maxed out on all of their credit cards. So that will credit utilization does take effect of your score. However, if they're paying well, you can possibly still get a loan as long as you can afford that new payment.
So you also mentioned debt to income ratio. Tell us a little bit about that. Is it the same as credit utilization or even similar to it, or are we talking about something completely different now?
It is something completely different. Debt ratio is based on your gross monthly income. So how many, all your payments that are reporting to your credit, divided by your gross monthly income. So that's how we decision to make a decision is on the debt ratio. Credit utilization, like I said before, you can be maxed out and we still will do a loan as long as you can afford that payment with your debt ratio.
Okay. So, another thing too, and this one I'll ask Diane. You've mentioned credit history. We've talked, I've heard about, the importance of the number of accounts opened. So when you're talking about your credit history and the number of accounts you have open, what is that sweet spot?
Well, they look at one, sweet spot. You've got, one open revolving line of credit, which could be a credit card. You have a closed-end loan, which means it's usually a personal loan or a car loan, something that doesn't, you paying it down as it goes. You don't keep that line. Or you could have a home loan. Some may have two credit cards. It's just not maxing out all of that you may get offers for.
Okay, so the other thing that I think is interesting is there are multiple levels, multiple categories. You have poor, you have good, you have excellent. I think I'm probably missing one in there that a person can fall within. And I'm just curious what the cutoff numbers are between those different levels. And of interest also to me is depending on, I guess, what bank or credit union you go to or whoever it is that's looking, that those levels aren't the same. Is that right?
Yes, that is correct. The tiers are different with each financial institution. ValleyStar, we have 5 different tiers. The premier tier that we like to call it is 740 plus. So if you're 740 or above, you're in the premier tier. Our next tier is 700 to 739. Then we go down to 699 to 675. Then 640 to 674, 600 to 639, and 599 and below. So those are our 5 different tiers. I don't really like to categorize them to say this is bad, this is good. Of course, anything above 700, you're paying your bills and everything looks good. But like I said, the score is so fidgety, you just never really know what you're looking at until you really determine that full credit report. That I mean, I've seen some reports they have medical collections, but they've paid all their car loan, credit cards, everything else perfect. Those medical collections will really hurt their score. Credit utilization, for instance, the maxed out cards that hurts your score.
Okay. So let's talk about this. And Diane, I'd love to hear from you on this. We all want that good credit. We all want that premier level, especially because it can hurt you, like we talked about that dream job or that loan you so desperately want. So, what happens if you were in one of those lower categories? Are you just out of luck, or is there a way to actually, climb your ladder to get back to excellent?
No, you're not out of luck. I guess the best advice to before you get that low is not to wait to speak with your creditors. If you know you're having issues, contact them immediately. See what they can do for you on making those payment histories, making extra payments or lower payments until you get to that stable point to help not fall below that category. And then maybe as you get more stable, you could get secure loan. Maybe when you get your tax refund, you set aside some and do that secure loan and start making payments on it. You start building that payment history again. But no, you're not out of luck, but definitely speak, to your creditors immediately so you can build that relationship and they can help you along the way.
Right. I agree with you, Diane. They're not completely out of luck, but I will say, like Diane said, just make sure you pay your credit. So if you have some delinquent credit or charged off accounts, speak to those creditors and pay that. Start there before you want to go borrow new money. I mean, that's where I would start, and then start with a secured loan. Or even if you have a good cosigner, a parent or a family member that has excellent credit, if they have room to cosign for you, that can also help your credit as well.
Awesome. Hey, Brittany Rowe, our loan services manager, Diane Walker, our card services manager at ValleyStar Credit Union. And again, I'm Becky Freemall. Thank you guys. I'm constantly amazed at the financial knowledge that surrounds me here at ValleyStar. And Diane and Brittany, thank you so much for taking the time to throw out some of that financial education and to help us navigate how to build our credit.
Well, thank you for having us, Becky. I enjoyed it.
Thanks, Becky. Appreciate it. Anytime.
And for those of you listening along with us, if you have any questions or have an idea for a future financial education podcast, let us know. Just email us at learn@valleystar.org. And if you prefer to dig around a little on your own, you can find plenty of information on our website, valleystar.org. We speak your language.